Welcome back to Closing Bell on a Friday. I am in a place called Dunrobin Castle on North Coast 500 route and my kids are here. Can you say hello to everyone on the show?
Hello.
And Oscar is there. And for the final show of the week for this Closing Bell, I'm still on holiday. It's no specific stocks that we are speaking about. We're going to pick about risk and reward in your investing. So when you're investing, you have to visit how much risk and how much reward you'll be gaining. For example, Fastly, yes, it's dropped 30%. But is it time to buy? You have to ask yourself, how much reward are you getting to the next last all-time high? It'll be 50%. If it dropped, the support point that you're looking at is round about 7, so you're talking about 20-25% risk. So would you risk 25% losses, or would you go for the 50% potential last all-time high? And how about the likes of Tesla? Tesla will be different. You've got the likes of Tesla where it's not the last all-time high reward, but also the potential breakout, the momentum, the breakout. If Tesla breaks another great quarter of earnings, they could even potentially go another 2x, another 3x. That's the breakout. But how about, for example, of the last Google? Google looks like they got potential to go up to 2,000, 3,000, but then Tesla is not growing no more. They're not paying dividends and they're not growing. The growth is slowly declining. A potential, the next floor, they might go down and then you might lose not to the last low of 1,002, but you potentially could lose up below $1,000 a share. So there's something you need to visit on your risk and reward profile. It's not just go invest and your gut feel. You have to look at least the risk and reward profile, where you stand, how much upside. And one last example, all my time favorite is Fiverr. Fiverr is hard to gauge their last all-time high because they're already all-time high. But if Fiverr does lose customer clients or they do have a bad quarter, they could potentially drop to 64 again from where they are, 180 to 64. So potentially about 66% downside. Or if they do well, they might break barriers again, but it's hard to calculate and forecast what the upside is. So that's where you need to look at before you visit your investing, on whether you should invest at the point where you are. So sometimes where you feel fearful when it drops really badly, you have to think about the reward. But sometimes if a stock is really at high, you cannot see any ceiling, you need to think about a breakout. And finally, if the stock's been going sideways, it looks such a good value, you have to think potentially they may break through the floor and go to the last really low floors that you've never seen before. Something you need to look at. So this is my Friday, this is my Closing Bell. I hope you've enjoyed this scenic area that I've brought you here. And this is my family all playing in this garden, not my garden. I know I've got comments asking whether it's my house. It's not my house, I can't afford this place. Okay, have a good time guys, have a good weekend, and I hope to see you over the weekend and also on Monday. See ya, bye.